Hello and good afternoon. I'm Thorsten Beck. I'm the director of the Florence School of Banking and Finance, and I would very much like to welcome you to this very first hashtag FBF Discuss. Now, our school has quite a tradition in online seminars, even before the pandemic. But of course, we've had lots of online seminars over the past years in which actually many of you also have participated. But one thing we have noticed is that among many of the topics that we've been discussing, some of them very technical, there's often broad agreement, and if there's disagreement, it's often on the nuances. But of course, we all know there are topics, there are issues, current issues, where there are quite strong feelings, arguments, and opinions on both sides, in favor and against. And it is also topics that where very good people, very smart people can have very good arguments on either side. And that's why we decided to create a new seminar type, which we call hashtag FBF Discuss, which is a kind of more debate style. I'd like to call it Oxford Union style, although it has been pointed out to us that it could also be called Cambridge Union style. And I'm not going to get involved in the eternal and long-standing Oxbridge rivalry. So let's just say we're going to have a new debate style events type with very clear rules, with a proposition, with a proponent, with an opponent. But of course, as always in our events, with participation from the audience through the Q&A box. Now, I'm going to turn over to the moderator in just a moment, but let me just mention, today it's the climate change. In a couple of weeks, we're going to have our second hashtag FBF Discuss, which will be on central banks issuing cryptocurrency, the arguments in favor and against. And of course, we will have more topics in the fall. And again, your suggestions are always welcome. So now for the introduction of the proposition, the proponent and the opponent, I turn over to our own Christy Petit, who will be your moderator. Thank you, Christy. Over to you.
Thank you so much, Thorsten. And it is my great pleasure to welcome you all to this first FBF Discuss. We have participants registered from every continent with 40 different nationalities, 38% of women. Nearly half of you have a background in economics. And today's motion will actually be: this House believes that the ECB should include climate change mitigation within its mandate, with Professor Dirk Schoenmaker and Professor Hans-Peter Gruener. We already invite you to vote in the poll, actually, that it will be open in a few seconds. Should the ECB include climate change mitigation within its mandate? And you have the possibility to say yes or no. The reflection upon the mandate is very topical, as the ECB is currently leading its own strategy review. And as some experts in our audience already know, ECB's mandate is the shortcut we use to designate the mandate of the European system of central banks. And while some derogations still apply to some member states, it is the ECB Eurosystems. And with common parlance, we use ECB's mandate, and this is what we will do today. So let me introduce our contributors today. If I can invite Dirk Schoenmaker and Hans-Peter Gruener to appear on screen. So indeed, our proponents will be Professor Dirk Schoenmaker, who is Professor of Banking and Finance at the Rotterdam School of Management, Erasmus University. And our opponent is Hans-Peter Gruener, Professor of Economics and Economic Policy at the University of Mannheim. I have a few housekeeping rules for you. So as we just did, you will be asked some questions during the debate. So please do participate in these polls. You will be also given the chance to ask questions. You can ask the Q&A box, and whenever you wish, even during the propositions and the opposition. And our contributors will have a limited time and will be interrupted in case time is up. So before passing the floor to Dirk, I just want to flag the result of this first poll. We wanted to actually assess what is the opinion of our audience today. The first question was asked. So is a priority for the ECB in terms of approach to mitigate its own balance sheet risk, support the transition to a green economy. There is actually no priority, both approaches must be followed, or none of them. And actually, 44% of our participants opted for the support of the transition to a green economy. So we'll start with opening remarks, followed with a short rebuttal from both sides, and then we will open the Q&A. So please, everybody, you're very welcome to keep following and engaging all along, and do not miss the polls. So Dirk, the floor is yours for 7 minutes. Thank you.
Thank you, Christy, and welcome to everybody this afternoon in this debate. And I'm happy to defend that the ECB should be involved in climate change mitigation. And I was quite encouraged by the poll. So let me discuss the reasons. So first of all, why? What is the problem? And the problem is that today, the ECB's monetary policy finances carbon-intensive industry with its asset purchases program and through its collateral it takes in its monetary policy and, for example, in the payment system. So the ECB is financing overly the carbon-intensive industry. And then you might ask, how big is the problem? Well, for that, I'm not going to bore you with many slides, but for that, I'm happy to share a slide. And this slide represents the carbon intensity of the average company in the European economy. So what we do is we take the amount of emissions in metric tons, we divide them by the sales of the company in millions, and then you get the carbon intensity. And for the EU economy as a whole, it is 573 metric tons for each million of sales. And what is it for the ECB? So for the ECB, we take the corporate bond portfolio in the asset purchase program, and then it is more than twice the amount. So 1,355. So there's a huge carbon bias. Well, the EU policy is to reduce by 2030. And I calculated that as true 322. We have already had 20% reduction, and we should go another 35 to the 55 reduction in 2030. So the ECB is double, and we should halve compared to the EU economy. So these are the facts. And then I'm going to stop sharing. And if it is so big, how does it happen? And the background to this is the ECB's policy to buy assets and collateral and take collateral in proportion to the market. And that's called the market neutrality principle. So just what the market provides, in proportion the ECB buys or takes as collateral. But this is not part of the treaty. The treaty says that the ECB should conduct its operations through the markets, through the open markets. And it is an interpretation of the treaty that it should be market neutrality. And well, I think the graph I showed you very clearly shows that the ECB market neutrality, the current approach, is hindering the European Union's policy to reduce carbon emissions. So it is going the opposite direction. What can we do about it? And not to concern you, I'm not going to make trade policies because carbon policies are for the governments. On that, I think we all agree, like carbon taxes. But what can the ECB do at the technical level? And my proposal is to tilt the portfolio weights for asset and collateral towards low carbon companies. So that means that you take a bit more of the low carbon companies and you take less of the high carbon companies, not zero, just you tilt a little bit. And in that way, you can reduce the carbon bias in the portfolio. This is fully in the operational procedures, how you take assets and collateral in the operation. We are not interfering with the monetary policy, price stability, because that's the main purpose of the ECB. And that should not be hindered. That remains unaffected. It's only in the execution, in the operations, that we make a change. If we do a medium tilting approach, then we can reduce, and I've done research on that, the carbon bias by 55%, going back to the EU average. That's possible without impact on the transmission mechanism of monetary policy. And that's very important, because I'm now moving to the treaty and to the mandate, and that's an extremely important legal issue. So I'm a fan of the EU treaty, which gives independence to the ECB and clearly specifies the primary objective, price stability. And then the treaty goes on, without prejudice to price stability, the ECB shall support the general economic policies of the EU. We call that the secondary objectives. And we all know that climate mitigation is a cornerstone of the European policy. It is a long-standing policy already for years. The Commission, the Council, and the Parliament in Europe, they all three fully agree on it. So this reduction target, which is today at minus 55% by 2030, is a collective agreement. There is full consensus. And my proposal is, and I'm finishing for the last minute, is that the ECB is not making climate policies of its own, because that is really the prerogative of government. They are the policymaker, but that the ECB just follows the EU policies and aligns with it. And then it should do this by independent decision. And the strategy review is a nice opportunity. And thus the ECB can become a responsible central bank and fighting climate like anybody else. And it will not affect monetary policy. Interest setting remains the same, and only the operations are changed. And by this, I would like to close my my argument. Thank you.
Thank you very much, Dirk, also for keeping the time. I will invite Hans for his own introductory remarks.
Yeah, thank you, Christy. First of all, I'd like to briefly thank the organizers for the format of, or congratulate them actually for the format of this debate. I think as Europeans, we should talk more with each other about our collective policy choices. So this format is most welcome. I wish we had had that like 12 years ago at the beginning of the debt crisis. So I think it's very useful. Let me come to the proposition at hand. First, of course, one should note that there is not one single type of green monetary policy. There are several different measures that can be considered and that have been proposed. And some of these measures I also consider to be completely innocent. Actually, they are pretty much in line with what the ECB regularly does, like, for example, properly evaluating the risks for the ECB's balance sheet that are associated with specific corporate bonds that is tied to climate risk. Now, I think that is fully consistent and not problematic at all. What I would like to concentrate on here are the measures that I consider problematic, and these are the measures that basically boil down to prioritizing specific bonds labeled green bonds one way or another in purchases or other transactions that the ECB undertakes. In my view, such a preferential treatment would actually not be compatible with the ECB's mandate as defined in Article 127 of the treaty. And that neither in the narrow sense, where we're just talking about price stability, nor in the broad sense. Before I elaborate why, I should emphasize that my critique actually doesn't mean that I'm not supporting green policies in general. actually just look at my second name and you see that you cannot be greener than me. It doesn't also mean that I'm not supportive of European integration. On the contrary, I spent a long time in my career just trying to improve or help improving European institutions. The point that I would like to make here is that if the ECB should, the way I interpreted it, overstretch its mandate into environmental policy, then this is just going to be most likely the beginning of a very unhealthy transformation of the ECB. And my concern is that this transformation will ultimately violate some very basic democratic principles on which our union is founded, and it will most likely lead to the end of the independence of the European Central Bank. So that's the point that I would like to make here. Let me elaborate why, and so let me concentrate on the two main arguments. The first one is that preemptively you have to do something about climate change, because climate change could affect relative prices, such as food prices relative to other prices, maybe price indices, or it could disrupt the transmission mechanism of monetary policy. I have two concerns about this line of argument. The first one is that you need to be able to predict how your monetary policy affects climate change on the one hand, and how climate change is likely to affect relative prices or the price level 5, 10, 20 years from now, if you want to do this type of preventive policy measure. Otherwise, you're just active, but you don't really know what you're doing. So that's the first point. The second point is that, of course, there are many major trends, global trends, local trends, that have the potential to change relative prices. There are many trends that have the potential to lead to financial crisis. The question that we have to ask here is, do we really think that it's the role of the central bank to act preemptively in all these fields? And is it really the role of independent technocrats to do that? Or should this be left to elected policymakers or to the people itself to decide what the priorities are and what the appropriate measures are? I'm very much in favor of the second approach. And the reason is that elected policymakers are far more accountable to the public than members of the ECB Council actually are, according to the current rules. Now, briefly, the second line of reasoning is the one that goes via the secondary mandate, where we have to check, is it possible that the ECB addresses or helps the union in fulfilling its climate goals without prejudice to price stability? Now, one question on this answer can actually be found in one of Dirk's papers, where he says that if we start to shift the focus of bond buying programs towards the green industry, then we will first have to learn how the transmission mechanism works. What does this mean? Well, it means that there is some uncertainty associated with what we do when we buy bonds. And we want to limit the uncertainty at least as far as our monetary policy mandate is concerned, because we want to make sure that we reduce the variance of inflation. My concern here is that if we concentrate on a too narrow segment of the market, we give up some degree of control over our final objective, and that would be at odds with Article 127 that clearly states that we should give priority to the objective of price stability. Of course, there are better policy alternatives. And the ideal alternative from my perspective is either to have an appropriate CO2 price that is fixed by governments, or that we go for quantities restrictions that we collectively enforce. Let me wrap up and just say a central bank has very powerful instruments. And this is exactly why it should not be up to an independent central bank to decide whether politics has failed in a specific area or not, and then do the rest at its own discretion. Otherwise, by the very same reasoning, the central bank could address all other issues where it believes that governments may have failed, such as world peace, fair trade, equality of opportunity, rent control, and so on. I would strongly recommend to the ECB not to go down that road, because in the end, the people are unlikely to accept it. Thank you.
Thank you very much, Hans. And we're coming to the time for rebuttal. So Dirk, you have the floor for 3 minutes and pick up whichever points you like.
Thank you. And can you see me?
Not yet, at least not on my side.
I did put on the screen.
Yeah, now
okay,
we see you.
Yeah, okay. My computer is slow. I think Hans made excellent arguments. And I think on a few things we fully agree. So the first one, we should not buy green bonds and have a preferential treatment. And I fully agree on that, because then we get discussion which type of green bonds, which sectors. And for that reason, I propose a general policy. So you just look at the carbon emissions, as I showed you in the graphs. That's a technical exercise. And then you have your tilting factors. And there is no need to give anybody a preferential treatment, apart that you want to reduce the carbon intensity. And that's your goal. Then an important issue is democracy. Yes, voters have voted for the European Parliament, and the current Commission is using the third party, the Greens, and has the Green Deal and setting the climate targets. We all agree on that. So I'm not asking for the ECB to set a policy. I only ask for the ECB not to be counterproductive, which are today. And the reason is because in the market, the carbon intensive companies like oil companies and energy utilities, they are also capital intensive. So they issue more bonds than like a service provider. Then it's very strange that the EU is lowering emissions and the ECB is keep on buying in large quantities oil companies and energy utilities. So I only say we tilt, and by rebalancing, we follow the EU. So the ECB is not setting any policy, just following the ECB, the EU. The policy should be set by the European Union. We fully agree on that. I don't see any uncertainty, because you just rebalance your purchases and your collateral. But to make sure there is no uncertainty and there are no problems, I propose to do it in small steps, so everybody can learn what the interaction is. I don't expect any interaction with transmission, because there is no trade-off between climate and the price objective. So I don't see it, but just to be sure, to be safe, to be conservative, we can introduce it in steps and then learn from it. And finally, I want to fully agree with Hans that both of us, and I think everybody in the audience, agrees on price stability to be the primary objective. There is no doubt about it. And because we don't see any trade-off, we could support the secondary objective, helping out the EU without making new policy. Thanks.
Thank you very much, Hans. The floor is yours.
Okay, thank you. So indeed, in a limited way, this is about the technicality, and the technicality is, are there multiple ways to achieve price stability in the best possible way? And if there are multiple optima, then of course the second sentence of Article 127 would tell us that we would have to pick the way which is most in line with the EU's general policies. Now, the way I think in which we should approach this, or in which the central bank should approach this, is really ask itself, like if you consider, for example, bond purchases, corporate bond purchases, what is the portfolio, the bond portfolio that we should buy if we want to be as sure as possible about the impact regarding the ultimate goal, and that would be CPI, for example. Yeah, the way, I mean, I'm not aware of any macro model that did that so far, but intuitively, the way I would interpret this process is that you have several alternative markets on which you can buy, and the bonds there are not perfect substitutes. I mean, if green bonds and brown bonds were perfect substitutes, then of course the whole discussion would not make any sense whatsoever, because if the ECB buys the green bonds, then the market would just buy the brown bonds. So that should be distinct markets with heterogeneous products. And the way in which I expect things to work is that there is uncertainty associated with each of these markets, because you basically don't know the exact location of the demand curves, which is why you want to spread things as widely as possible. And then, of course, you have to ask yourself, what does as widely as possible mean? And that is something for econometricians to do. And you end up with some result, and maybe the result is green, and then I'm most happy. But if it should be brown or pink, then there is nothing the ECB should do about it. But the ECB should then just say, well, we leave it to governments to do the rest. And I think this is a division of labor, which is very fruitful, because the alternative is that each and every policy institution starts to get involved in each and every policy field. And what this reduces is accountability, because if everybody is involved in everything, then it will be very difficult to point with the finger to one of them and to say, well, that's you who screwed this up. So I think giving clear objectives, allocating clear objectives to different players is something very useful, because it provides efficient incentives to those players. And that's one of the things that we actually risk here. And let me also stress, this will most likely, if we do it, will be a case of precedence. And we will end up with very similar policy discussions regarding all other areas that are covered by Article 3 of the Treaty of the European Union. I'm sure we will get back to that in the discussion. Thanks.
Thank you so much, Hans, also for keeping the time. That was really insightful and perfect to prepare for the Q&A. So here we are. We can turn to the question from our participants. We're glad to have many contributions already during the registrations with nearly 40 questions. And I've seen already many interesting ones in the Q&A box, and please continue submitting them. So let me start with maybe a bit on the monetary policy operation, a bit the how. So because many participants already asked questions on greening the ECB collateral framework, but also the CSPP. And so Dirk presented his argument about tilting APP in regard to market neutrality. So, and in the meantime, we had the result also of the poll from the participants. So we would be happy to hear your views, both of you, on the fact that they said to up to 58% that indeed the ECB can use asset purchases to tackle climate change without prejudice to its primary price stability objective. So I will also invite you to comment on this first result. If you want to start, Hans, just to reverse your order, and then I will invite Dirk to answer.
I mean, I enjoy that from the numbers. This is kind of an uphill battle for me, and I saw in the lineup that there are many people from the ECB, and I say hi because I know many of you. But let me, since I have friends there, let me stress one thing. I can fully understand that a central banker wants to be perceived as someone who does something useful for society. The ECB has been part of the Troika. The ECB has been part of a mechanism that many people, specifically in Southern Europe, have perceived as very painful over the last decade. And I can fully understand that the central bank is now trying to gain some popularity. And of course, taking part in the battle against one of the, if not the most challenging political problems on the planet makes you look better. And I can fully understand that you consider this. And the problem that I just see is, I'm not sure whether everybody involved knows where this could end. Let me just look at one specific other alternative policy issue, and that would be peace. Let's consider the situation between Russia and Ukraine. If there was a war taking place, it would most likely affect relative prices, like, for example, wheat prices. So the same story that Frank Alderson is telling about climate change can be told about that one too. Would you, Dirk, would you believe that it's a good choice for the ECB to engage or to check its bond buying program with respect to the probability that it can make war between Russia and the Ukraine more and less likely? What would that imply? Would it imply that that the ECB should buy more defense bonds? Would it imply that it buys less defense bonds? I am convinced that these are issues that need to be addressed, and they need to be addressed in Parliament. They are not they should not be the concern of an institution where people have a mandate to sit there for 8 years without the possibility really to get them fired. That's not what democracy works like. And so I see the danger that if the ECB engages in this kind of activity here, there will be calls for other similar measures elsewhere. And then we will also have to wait whether we concentrate on the CO2 emissions that are associated with bonds, whether we concentrate on something else that is associated with bonds. Right now, this looks pretty good because right now, Dirk, you're just adding one dimension to what the ECB does. But if you are suddenly focusing on 4 or 5 dimensions, clearly we are entering the sphere of politics. And I think that this will ultimately risk to destroy the construction of the European policy of the European policy institutions, and it will destroy the way in which a very successful institution so far actually works.
Thank you, Dirk.
Yeah, I think that is the question. If you do this secondary objective, or do you open the door to others? We had this debate at Bruegel. There's a think tank where I'm a member, where I first published my paper. And then we said we should not do that. And the key issue is, it is a long-standing issue, full consensus. And I reiterate, I think Hans and I agree on that the Parliament should here be in charge. So the Parliament agreed on this reduction of climate emissions, 55% by 2030. And we all know, while we may discuss in division of labor, the task is very big. We know that. So at least we should not work against each other. And that's currently what's happening. As I said, this capital intensive industry, they're overly represented on the bond market. And it is strange that the ECB keeps on buying this while the EU tries to lower it. So my minimal request is not to counteract the official policies of the EU. And that's happening today. And just to counter the bias and recognizing that policy is set in Parliament. And I think we all agree on that. And where does this end? I hope to an acceleration to carbon emissions. So that's where I hope this one ends. And I agree with Hans that we should be careful not tomorrow to combat something different. And that's the issue, that this is an overriding task where the EU has a long-standing consensus on. That's why the ECB can align in its secondary objective, which is part of the EU treaty.
Thank you very much to both. We came already in the first question on the principle of independence and also the related accountability mechanisms. And actually that was also raised many questions. So if I can have a quick follow-up, because you identify this main actor, but some participants were wondering like which democratic process or legitimation to empower, whatever the path you prefer, because you have different views in this regard, but which democratic process or legitimation and which kind of accountability mechanisms, to close on this issue, and then we move to another question.
I'm happy to start. The ECB is conducting its strategy review, and after the summer it will submit it to European Parliament. And as part of the strategy review, the ECB is expected to include on climate change, and Christine Lagarde promised that. So I propose that the ECB fully sets out what the plans are, and then there can be a proper discussion in Parliament. And the key issue is that the ECB is independent, so the ECB gives its plans to the Parliament, then there is a proper discussion, and then after that discussion, the ECB itself decides how to go forward. And given that we are all grown-ups, if there are sensible arguments in Parliament, the ECB will take them into account and then explain how they deal with them, and then they go ahead. They don't need the approval, or they don't need an instruction from politicians, because then the independence is gone. And I think we all in the seminar agree that will be the end of the ECB. So no instructions, only a proper discussion in the European Parliament of the strategy review. Then you have accountability, but you keep the independence, because that's crucial for a good central bank.
So the way in which I think the central bank should proceed would be like a two-step procedure. The first step would be really just concentrating on the price stability and control of inflation part, and that would mean that you, if you again concentrate on bond buying programs, that you ask the question, what is actually what should we do about monetary policy transmission that gives us the best possible control over prices? So that is one research question, and one needs to come up with a reasonable answer to that one. The second question that one would have to address is, what are the side effects of monetary policy? And I think so maybe there is some dialectic moment here. There is something very useful about the kind of analysis that Dirk has performed to see, well, what are we actually buying there, and what does that imply for financing conditions of various types of firms? Now, like this is one of the side effects that bond buying programs have. Of course, there are other side effects that you should consider, like the discussion about the distributional impact of monetary policy, like the discussion about what does monetary policy imply for savings rate, what does it imply for poverty of the elderly if they choose not to save, whatever. So there are all sorts of side effects, and they have to be systematically studied. But then in the end, we will, based on both, we will have to ask ourselves, is it possible to reduce any of the adverse side effects without prejudice to the objective? And there, I think I have made pretty clear. I have doubts that will be very easy, and sometimes I'm pretty sure it will be impossible. So regarding the specific issue at hand, I have doubts that it will be possible to shift significant amounts into a relatively small growing green segment without limiting the ability to control the development of inflation. I should also say that if we should go down that road, there may be new side effects. And another new side effect, of course, is that if you start to help a green industry via bond purchases, then this only helps those firms that actually emit bonds. But the others, the small ones, the growing ones that are green too, but that don't have access to the bond market, they suddenly are relatively worse off. And so going down this road may lead us to a situation where we have another round of side effects, and where we start to get more and more involved in the micromanagement of the economy.
Thank you both for your answers. And actually, some of our participants also expressed some solutions. So let me also stress Klaus, for instance, who raised the explicit reference to a stated secondary objective within the mandate. I mean, we have discussed the legal aspect, so maybe I would invite you to move on to the relationship between this ECB's green mandate within the monetary policy and also the broader context, the fact that the ECB is also a supervisor within the euro area. And actually some of our participants raised questions in this regard. So for instance, Idiki Sato asked about the relationship between the ECB's green policy and the Prudential toolkit. Is there a commonality and consistency between them, in relation with monetary policy. And what would you say about the mandate? Because just as a reminder for our participants, since 2014, the ECB is indeed part of the system for banking supervision together with national supervisory authorities. And this is part of the mandate, broadly speaking, of the ECB. So Dirk, if you want to take the floor first.
Yeah. There are two sides to the debate. One is the risk from global warming that will have an impact on asset values. And we know Ben Caldecott of Oxford coined the term stranded assets. So that's the risk side. And I think that's fully acknowledged on the supervision and on the stability side. And we get now climate stress tests. So I think there the issue is well acknowledged. But there are two sides to the role of a central bank. So on the financial stability, on the supervision side, you want to protect against looming risks. And we call it now the green swan, the tail risk of the climate. That's well established. On the monetary policy side, you're really allocating in the economy. There's an allocation role. There's not a risk role. And you have haircuts for credit risk, but the central bank injects money into the system, and then the objective is to keep inflation close to or below 2%, but you allocate to the economy. So my argument is really that we are currently allocating too much to high carbon and too little to low carbon. And just to correct it, we are not exiting any high carbon, we just reduce it a little bit. And that's really an allocation argument, and that's different. So, because I know many central bankers and many finance people, I'm a finance professor, they love to talk all day about risk. But let's face the music, at the end of the day, we do finance because we want value creation in society to happen by companies. So it's first about value creation, allocation, and then we have to take care of the risk. But monetary policy is really an allocation argument, and then to bring the allocation not too much to the high carbon side of the economy, to reduce that allocation.
Thank you, Dirk. Hans?
So I can keep it brief. Since supervision was addressed, of course, if we add climate policies to the ECB's portfolio, then the portfolio consists of price stability objective on the one hand, and there is the firewall, and behind the firewall there is bank supervision, and then we have the climate objective as well, and there are all kinds of possible conflicts of interest that you can think about. For example, of course, this is not just about bond buying, but it's also about lending to banks. So I've seen the proposal that you could in a program like LTRO, you could prioritize banks that have a greener portfolio on their asset side, and then that might conflict with financial stability if you're facing a systemically relevant bank that is in trouble, but it's not green enough. What do? Do you say, well, we're only going to lend to you if you pledge to switch to different portfolio, but maybe the bank has an absolute advantage in lending to that sector. So I think, going back to my point about democracy, from the perspective of a citizen who is not an expert in monetary economics, the central bank is already quite a difficult, complex thing. People there are doing things that most people really don't want to understand even. Yeah. Now, if you add this type of tilting policy that we are discussing here, then it will become more and more obscure from the perspective of citizens. And I think the attempt to become more popular will backfire, because people will say, well, they are doing something about prices that I don't understand, based on some numbers that I don't really know where they come from. And I really don't know whether I can rely on the price that I see out there, whether it has been fixed by the market or whether it has been fixed by the ECB. So I think that this kind of policy will add a lot of complexity from citizens citizens' perspective, and maybe it will just achieve the opposite of what obviously the board of the ECB currently has in mind when it goes out on Twitter and all the things that look very good, yeah, to become more popular, but maybe people will just not accept it if the ECB.
Thanks a lot. So we're coming to the end of the Q&A. I will ask a last question, which is actually linked with what you were saying. So some of our participants also looked at other aspects which are important when you come to the identification of what is green, right? A lot of development regarding green standards. So a participant is asking about like proposing a solution to go back to the strict definition of products in which the ECB would invest, would lead the operation. So once you have these green bond standards, they could have an homogeneous regime and going in one direction. Would you agree with that? And what would you say is the relevant scale? So of course, we're looking at the Euro area, European Union, but we know that it's a global issue. So if I could ask you also to state what you think on the global stage and the place of the ECB within this network for greening the financial system together with other central banks. Dirk?
Yeah, I think we should stay away from green bond standards, the green taxonomy. Is nuclear energy part of it or not? Then we get all that kind of discussions. I would stay clear of that. That's why I took a technical approach, just carbon intensity, and the European Emissions Authority measures the emissions of all the large companies. So that's an objective standard which is available in the market. So this information is available. And no choices, no discussions in the ECB board whether nuclear energy is green or not. And because that would really be counterproductive. And then I'm on Hans' side, then we get really policy making. So please stay away from that. I'm only saying correct your bias towards high carbon. And that's what can be easily done because climate is not local, it's not left or right. It is a global issue. So the People's Bank of China, the Federal Reserve, the Bank of England, and the Bank of England already started. We can all follow the same policy in their own technical way, but the same idea that we reduce carbon intensive assets and collateral and increase low carbon assets and collateral. And that's an easy policy where there can be international alignment through the national the network for greening the financial system.
Thank you, Hans.
So I should stress once more that I think that what Dirk has in his data is like a smoking gun. I think one should take it seriously, but with a look to that, the ECB should just solve an optimization problem based on data. And the optimization problem is what kind of portfolio actually maximizes control regarding our ultimate objective, and that's the inflation rate. And if it should turn out that for a very useless reason, there is a ground bias, I would be most happy to see it gone. But that should be the solution to a different problem than just adding an extra criterion which is orthogonal to price stability without looking in detail on how this will affect our ability to control prices. So I'm sure that something has to be done about the data that you find there, but I think the approach should be in line with Article 127. That would be to solve the optimization problem. How do we best control inflation? And if it turns out for no good reason we don't do it a green way, I would be most happy to accept it, but that should not just be put on top of what the ECB is doing in an ad hoc manner.
Thanks for your concise answers. So it's time to close your Q&A, but please don't leave in the audience because we're going to ask our two guests today to give their final remarks. So please, Dirk, you have the floor for 3 minutes.
Yeah. So thank you for your questions in the audience. And I would also like to thank Hans for the good discussion we had. I enjoyed it. And let me start with the facts. So I would say it's a bit more than a smoking gun. I opened it and I looked into it in quite detail. So I think it is a fact that there is a carbon bias. And it's there are several research papers backing that up. Just because carbon intensive companies are more capital intensive. So if you take the market without thinking about it passively, you end up with a carbon intensive portfolio. That's fact of life. If we would go out to the public and we explain to them that their central bank is in the end supporting the high carbon, the carbon intensive industry, they wouldn't understand it. So I agree with Hans that we should not go to the public with difficult and technical things. But if we explain to them that currently the ECB, their currency is supporting brown companies just because they are more active on the markets, then I think that's what I would not understand. So my claim is just look at the carbon intensity, correct that bias, do it in a technical way, and then you align with EU policy. So we stay fully with the mandate, the primary move on policy setting in the European Parliament. I think I'm also in favor of democracy, but I only ask the ECB to be responsible and not to work against the policy we do in the EU. And the final argument is, and I think that's where we most disagree, is there an interaction with monetary policy, with price stability? And I think there is not. And so you can do this tilting in any way that is a modest medium tilting without affecting the effectiveness of monetary policy, the impact on price stability. So I fully agree with that because we need price stability, and I don't see any interaction. I looked for it, and I'm happy to be proven wrong. We like Kuhn, who wants to falsify, so I'm open to falsification. But so far, I didn't see any evidence that there is interaction, because then I would be on Hans' side. But given that there is no interference, we could reduce the carbon bias. And thanks a lot for your patience this hour, and I hope you enjoyed the debate.
Thanks a lot, Dirk. Hans?
Okay, thanks, Dirk. I was looking forward to that too. I enjoyed it. So I would like to ask the audience a very simple question. We have lots of policy institutions in Europe and all over the planet. Yeah, we have the ECB, we have the Commission, we have the European Medical Agency, we have all sorts of, we have Frontex, we have all sorts of institutions. Would you like to live in a world where each and every institution addresses each and every policy problem, yes or no? Now, my answer would be no. And I think there are two good reasons for that. The first reason, there is a very nice paper by Mukhopadhyay on several agencies addressing the same problem, where he argues that there is a problem of coordination, multiplicity of equilibria. Some equilibria, like mixed strategies equilibria, are actually pretty poor because you don't really know what the other one is going to contribute. What does the ECB expect the council to do when it does something? It's very difficult to coordinate that. If you split up tasks properly, coordination is facilitated. That's one argument. The other argument is accountability. If you split up tasks, you can hold the institution that is in charge accountable. My deep conviction is, since monetary policy making is done by an independent institution in Europe, it should, to some extent, actually be boring. I say this here because I know the audience is composed of central bankers. And so I have to say, your job is to do something that usually should be boring. And if it's not boring, something is wrong about the rest of politics. Unfortunately, it doesn't have to be run by boring people. But if you're not boring, you should at least pretend to be boring to some extent. So monetary policy is for people who don't overdo it, who don't overstretch their mandate and leave the fancy stuff to other policymakers. Yeah. A central bank, and let me end with this, for me is a little bit like Spider-Man because it has superpowers. Yeah? And therefore the Peter Parker principle applies. And that is, with great power comes great responsibility. And in this context, this means you do not need to do everything that you can potentially do. You do not need to do everything that you would love to do, but you should just do what you are asked to do, and that would be to take care of price stability. I enjoyed this a lot. Thank you very much, and looking forward to the vote. Yeah.
Thanks so much to both of you for a rich debate and also super clear arguments. So while we conclude, indeed, I invite all our participants in the audience to vote on the motion. So you see it on your screen. Should the ECB include climate change mitigation within its mandate? So it's going to be open for the next 2 minutes or so. We wanted also to let you know that we would like to continue this conversation with you on our social media, so #FBFDiscuss. As you see, there are many arguments, many facts, and we can continue discussing with Hans, with Dirk, and also within this wonderful group. Also we have 2 references on our website. One of them is a paper by Dirk, and also some works that have been published by the Network for Greening the Financial Sector that we mentioned in the debate. So we invite you also to consult those references if you want to read more. While we wait maybe half a minute more to get your vote on the motion, I would like to really thank you very much, Dirk and Hans, for your contributions, and also to play this game in this setting. I think it's very refreshing. We've seen some participants appreciating it, and also to save the date for and follow our advertisement for the next FBF Discuss. As Torsten said during the introduction, it will be on central bank issuing cryptocurrencies. So now we have the results. So actually it's 65% of our audience thinking that the ECB should include climate change mitigation within its mandate. So if you want both to react very shortly before we close the debates.
I'm happy to see that the majority wants to be the ECB to move to reality and to become responsible, and to rest assured we should follow the EU policy, just align with them and not making new policies. So that I fully agree. I think that's what we should get out of this, but then we should work together with the European Commission on this issue, on this important issue.
Okay, I think I counted that there were 13% against at the beginning, and now it's 35%. So what I take away from this is that I will continue to make an effort to talk as much about this topic as possible. As I said, I'm seriously concerned that this is not going to be the end of a development, and I think that we should not just concentrate on this specific issue, but that we should look at the principles of the union and what this step could imply for the principles of the institutional setup. And so this is why we should, no matter how seriously we take the climate, we should also take seriously that the European construction is a very important thing, and that we should not just somewhere start to fix something with very severe consequences for everything that follows. Thank you.
Thank you. Warm thanks again to both of you, and thank you all to our participants, and we hope to see you next month for the next FBF Discuss. Thank you.